In today's video, we're taking a deep dive into the COVID-19 pandemic financial crisis, which sent shockwaves through the global economy in 2020. It wasn't just a health crisis, it quickly became an economic catastrophe, as countries around the world went into lockdown, stock markets plunged, and millions lost their jobs. But how did this all unfold? What were the causes, the impacts, and how did the world respond? Let's break it down. The global outbreak and immediate economic impact. In late 2019 and early 2020, the world was hit by a new virus, COVID-19. What started as an outbreak in Wuhan, China, soon spread across the globe, sparking a pandemic. As the virus spread, countries scrambled to contain the outbreak, leading to lockdowns and social distancing measures that brought global economies to a sudden halt. China, the world's second-largest economy, was the first to impose strict measures, which disrupted global supply chains and caused delays in manufacturing and trade. Then, as countries like Italy, Spain, and eventually the United States went into lockdown, it became clear that the pandemic would cause an unprecedented global economic slowdown. Stock market chaos. A global sell-off. The stock market was one of the first places to feel the shock. As COVID-19 spread, investors began to panic. With the global economy grinding to a halt, there were fears of an economic recession, leading to a massive sell-off. In March 2020, major stock indices like the Dow Jones, S&P 500, and Nikkei 225 experienced some of the biggest drops in history, with the Dow Jones plunging by over 2,000 points in a single day. The stock market lost trillions of dollars in value, with volatility reaching unprecedented levels. This was the beginning of a financial crisis, and it was clear that this wasn't just a brief dip, it was something far worse. The job market crisis. The impact of the pandemic wasn't limited to the stock market. The job market was hit hard as well. As businesses were forced to close or scale back operations due to lockdowns, millions of people lost their jobs. In the United States, unemployment claims skyrocketed. By April 2020, over 20 million jobs were lost in just 1 month, and the unemployment rate surged to 14.8%, the highest it had been since the Great Depression. This wasn't just an issue in the United States. Around the world, countries saw record levels of unemployment and rising poverty. Small businesses, restaurants, and industries like travel and hospitality were particularly hard hit, with many unable to survive the prolonged shutdowns. The economic stimulus. Government intervention. As the financial crisis deepened, governments around the world began rolling out economic stimulus packages to mitigate the damage. In the United States, the government passed a $2.2 trillion stimulus package called the CARES Act, which included direct payments to individuals, extended unemployment benefits, and small business loans to help keep businesses afloat. The European Union also introduced its own €750 billion recovery plan, with measures to help struggling economies like Italy and Spain. Central banks, such as the Federal Reserve and the European Central Bank, slashed interest rates to historic lows and began massive monetary easing programs, pumping trillions of dollars into the financial system. While these measures were essential to preventing a complete economic collapse, they also increased the global debt burden and raised questions about the long-term economic consequences. Supply chain disruptions and global trade. Another major consequence of the pandemic was the disruption of global supply chains. As factories in China and other manufacturing hubs were shut down, the production of goods slowed to a crawl. The flow of goods and raw materials was severely restricted, leading to shortages of essential items like medical supplies, food, and electronics. In the early months of the pandemic, stores in many countries faced empty shelves, while businesses that relied on global trade struggled to keep up with demand. With global trade down by nearly 30% in the second quarter of 2020, countries had to adjust to a world where cross-border commerce was drastically reduced. This supply chain breakdown added another layer of complexity to the already chaotic situation. The impact on global economies. On a global scale, the pandemic-induced financial crisis was unparalleled. The global GDP contracted by over 3.5% in 2020, the worst decline since the Great Depression. Emerging markets were hit particularly hard, as they relied heavily on exports and international investment. Countries in Africa, Latin America, and parts of Asia faced deep recessions as global demand for goods and services plummeted. The crash in oil prices, which fell below $0 for the first time in history in April 2020, also triggered massive losses for oil-producing nations, contributing to a global recession. Even as countries began to reopen, the recovery was slow, and many industries, especially those reliant on travel and tourism, continued to struggle. Stock market recovery and economic rebound. Despite the dire initial impact, the global economy did begin to recover in the latter half of 2020, thanks in large part to the stimulus measures and vaccination programs that began to roll out. Stock markets, which had plunged in the early days of the pandemic, started to rebound. By the end of 2020, the S&P 500 and other major stock indices had regained much of their lost ground, fueled by optimism about a vaccine and the eventual return to normalcy. However, the recovery was uneven, with some countries and industries bouncing back quicker than others. The economic damage in sectors like hospitality, travel, and small businesses would take years to fully heal. The long-term consequences. While the immediate effects of the COVID-19 financial crisis have subsided, the long-term consequences are still unfolding. The massive increase in government spending and debt is raising questions about future inflation, tax increases, and economic stability. In addition, the crisis accelerated trends such as remote work, digital transformation, and the rise of e-commerce, all of which will shape the future of the global economy. The crisis also highlighted deep inequalities, as those in lower income and essential jobs suffered the most, while wealthier individuals were better able to weather the storm. The COVID-19 pandemic financial crisis of 2020 was one of the most severe economic shocks in modern history. It brought the global economy to its knees but also showed the resilience of people, businesses, and governments in the face of unprecedented adversity. While the world is still recovering, the lessons learned during the pandemic will undoubtedly shape the future of the global economy for years to come. What do you think about the COVID-19 financial crisis? How did it affect your life? Let us know in the comments. If you enjoyed this video, don't forget to like, subscribe, and hit the bell icon for more financial insights.